Hi everyone, welcome back. This is part 4 of the course. This is the technical analysis part of the course. And in this part of the course, we're going to speak about support and resistance levels, as you see in your screen in front of you. We're going to define our strategies, how we're going to analyze, chart, and execute trades in the market. I'm going to propose 2 strategies for that. We're going to talk about candlestick patterns and confluences, in addition to the different types of trading, swing trading, day trading, and scalping. But I just wanted to start here before we actually attack the support and resistance to say that, in my opinion, as you might have heard me say before, I believe that technical analysis is the least important part of being a successful and consistently profitable trader. It's my belief that the emotional work that we need to do as people and as traders is what holds most of the traders back from becoming profitable. Once we do that, it's quite easy to get a grip on analyzing the patterns of the market and of the technical analysis and the risk management that's necessary to become a successful trader. So stay tuned to the channel where I'm going to talk a lot about the trader's mindset. And in addition, I will talk about technical analysis and the other things related to trading. So here we start with understanding support and resistance. What is support and resistance? So here are some key points about support and resistance. Support and resistance, or as we'll refer to them as S and R. Support and resistance are levels or zones where prices are rejected based on order flow. As we see, like in the real market, other than the trader's market, for instance with gasoline, there are some places that we've never seen gasoline get that high, and we've never seen gasoline get that low. And if we do, it's very, very rare. They usually range between a high and a low. And the same is true about a lot of the products we buy. So these are levels or zones that the speculators, people who are looking at the market and making assumptions about where the price is going to go, they are keeping a lot of their positions above or below these zones. They're assuming it's not going to go higher than a certain price, or it's not going to go lower than a certain price. And these traders are the big traders that move the market. So it's very important to understand these zones, because this is where the whales, or the big money, as people like to refer them to, these are where the big traders are sitting, and they have their positions ready that when somebody tries to breach a certain zone or a certain price level, they're ready to either sell it down or buy it up. Another thing to know is that the higher time frame levels are the strongest support and resistance zones. That means that, as we'll see, there are daily charts, monthly charts, weekly charts, and there's even 1-minute charts. Now, you'll find the same looking price action on almost any chart. There will be support and resistance zones on the minute chart, and there will be support and resistance zones on the monthly chart. But the zones of the monthly chart and the weekly chart and the daily chart, which are considered the higher time frame levels, are the strongest support and resistance zones. This is where the big money is trading, and this is where the big prices are held. We'll get into swing trading and scalping, and there is place to make trades on all those charts and respect those support and resistance zones as well. But it must be said that the higher time frame levels, the daily zones, the 4-hour zones even, are the levels that need to be respected. These zones offer the best price to open positions with minimum risk and maximum reward. This is true because once you get to a certain zone, and guys, we're going to see the charts, so don't worry if you're not fully understanding what I'm talking about. Once you see the charts, you'll come back to these slides and everything will make a lot of sense. But these zones are very good places to open your positions. They are good prices because in a certain sense, the zone protects you, as we see in the next point too. The zone is safe because we are going to assume that above this zone, there are going to be traders who want to sell it down. Or below this zone, there are going to be traders that want to buy it up. So if we could get our stop losses under these zones, as this is the next point, or above these zones, then we could consider that our risk, where our stop loss is, the final point where we're out of the trade because we lost, we could assume that if we put those stop losses above these zones or below these zones, then they are in a safe place. And then we could continue going towards our target with minimum risk. So these are the three possibilities what could happen when prices reach a support or resistance level. The first is that price rejects at the level. As you see over here, the price went up, hit that level, the horizontal line, and went back down. That would be considered a rejection. What's happening over there? Price was going up, and there were sellers sitting right there at that zone, and they have limit orders, which means that they opened their positions, could be way before the price actually reached it. And once it reaches it, their positions open automatically and sell it down. And these are the movers of the market. Us as retail traders, we don't move the market. We're putting in our orders through a broker who has connections to a bank who is actually moving the market. But these, especially the higher time frame support and resistance zones, the traders there are actually moving the market. So the first possibility is that price hits the level and rejects, goes back down. The second possibility is that price breaks through the level. That means it actually reaches it, and of course usually there's a pullback or some consolidation where the price doesn't know exactly what to do, and then it actually, as you see over here, it breaks through that level and goes higher, or obviously the same could be true about going lower. And finally, the third possibility is that price creates what we call a false break of the level. This means that price reaches the level, usually consolidates a little, and then breaks through the level, but immediately gets pushed back down through the level. Everything that I'm showing here is in the long position, going up, hitting a level, and then going back down, or going up and continuing up, or going up and getting pushed back down after a false break. But the same can be true the other way as well. But a false break is when it actually breaks through the level, but it's called false because it didn't follow through on that break. And it was an immediate little break, and then you saw that the orders came in and pushed it back through the level. And when we speak about candlestick patterns, we're going to highlight this fact of the false break because it's in a certain way a giveaway of where the traders are sitting in the market and where you want to get in. But these are the three possibilities. What could happen when prices reach a support and resistance level? Another thing to know is that old support becomes new resistance and old resistance becomes new support. So as you see in the bottom left of this graph, the price went up, rejected at this horizontal level, came back down a little, and then broke through in that third arrow. And then it hit another resistance level and then came back down to hit the support level, and it went back up. Originally, the first horizontal line was resistance. Resistance means that it's going to get stopped. You're buying against resistance and you're selling against support. They're really the same thing, but they're called two different names because it depends on if you're a buyer or a seller. As we're going up, it hits that original resistance line and stops, but then it breaks through the resistance line. But then you see again, it comes back to it, and that original resistance is now support. And it uses it as support and then even goes even higher. And then as we continue through this chart, it comes back down to this, what used to be resistance over here is now support over here. And then it eventually breaks through, and what used to be resistance back over here is now support. Again, it was support here, but it was resistance here. And then it goes back up, and what used to be resistance is now support, and etc., etc. This is the idea that support becomes resistance, and resistance becomes support. So just because you're seeing something and there haven't been a lot of buyers there, but there have been a lot of sellers there, that means that there will be sellers there in the future, because a point of resistance whether it's support or resistance, stays that resistance. Some more points. A strong support and resistance level will likely be so in the future too. Meaning, if you've seen it acting as support and resistance in the past, then you need to respect it to be support and resistance in the future as well. And it might not hold, but we must respect it like it will hold, because we're going to be conservative and we're going to assume that when there have been buyers or sellers in the past, if I'm buying and I'm trying to push up the price, and I've seen in the past that there are sellers at a certain price, I'm not going to just hold and be stubborn and keep going. I'm going to get out of my position when it hits that level of resistance where I'm pretty certain, based on the past, that there are sellers there. So I need to respect the support and resistance levels. The second point is that the more touches of that level, or the more rejections that level had, the stronger it is to be considered. So if I'm noticing a level, and it really could be on any chart, a daily chart, a monthly chart, or even a small time frame chart, if I'm seeing that price keeps on rejecting at a certain level, that to me shows that there are buyers or sellers at that level that are trying to push up or push down the market. And therefore, I need to consider it a strong level. The third point is that round numbers often act as support and resistance levels. For example, as I have over here, 1.50000. That's a very round number. At the banks, they don't care about the little 0.00123. That's not a big level for them. But they want to make sure and protect price at these big levels. So many times these levels act as support and resistance levels. This goes together with the next point, that these levels are more like zones. They aren't exact levels. This means that it's not an exact price, that when it hits that price, it's going to reject. We have to look at these levels as around a certain price. We have to look at it as a zone, which is an area of price. And the same is true with these round numbers, that it's not exactly necessarily at 1.50000 that the price is going to reject, but more likely it's going to reject around that level. So much so that it has a hard time getting through the level. You'll see at something like 1.500, whatever, that it goes through and it gets up, but it's hard to get to that 10 pips away from there. And it gets pushed back down to the level, and then it goes, and it's hard to get within 10 pips lower. And it just ranges kind of going up and down around that level, because those levels often act as support and resistance levels. Hey everyone, welcome to the charts. Okay, we're looking at the euro dollar, the euro USD. We are on the daily chart over here. And we're back in 2015 if you care. And price was going down. We have the lower lows, the lower highs. Here's a lower low, a lower high, and then price falls. Makes another lower low, another lower high, price falls again. And it seems to stop in March around here. And then price is consolidating. So what I want to do is I want to pull out my rectangle over here. I'm going to click on it, and I'm going to make that a level. And I'm going to say that this is a strong support and resistance level because we are on the daily chart. So that means that the big traders are sitting around here. And what happens? It hits that level, and then it goes up over here. And you see that this minor level over here is kind of where it's a zone, right? We spoke about that the levels are zones, but it's kind of near this little low. And over here we had sort of a wicked rejection. So that means, and we'll speak about this when we get into what a candle actually is and what a candle is showing me. What are the wicks and what are the highs and the lows of the candle? How do we understand a candle? We'll talk about that when we explain candlesticks and patterns. What we're seeing over here is that it reached this low, and then it starts to hit this point and reject again once, twice, third. Okay. And then it comes back down because obviously it's not going to be able to pass this. So the sellers push it down. The bears push it down, right? The bears are the sellers and the bulls are the buyers. The bears push it down and it reaches around this zone. Okay, so that means we want to pull it up even more because we thought that this was the price. But again, it's a zone. It's not exactly a level. And by the way, if you notice over here, we're around 1.05000, right? We're not exactly there, but we're around there. So that's the round level that we spoke about. And it gets a second rejection over here. And then it does break through eventually. But look where it gets stopped. Over here, which is similar spot to where it was before. And price goes more and more. And it does break through over here. But I would consider that a false break because look how strong it popped up through. There was no hesitation over here. Look at this hesitation over here, guys. One wicked candle. That means the price went up and it shot back down. Push back down again. Push back down again. And then finally push back down. And then it was able to get through. And price just goes up and down, right? After it went through, what was resistance became now support. And this little, I'm going to just highlight it with an ellipse. This point, that one little candle, that's a whole day, guys. So that one little point, this used to be resistance. And then when it broke through, it needed to test it again and make it support in order to go higher. And then it reached this point, which look how many touches there were here. 1, 2, 3, 4. That's a false break. Didn't get through. Then more touches. This whole point was touching it, right? And then it gets touched over here. And then doesn't know what to do. It's trying to go higher. Again, another touch. Lower, lower, but kind of really at this level. You see, there's one touch here, one touch here, one touch here. And now it gets a little bit, it's finding support, a little bit higher support than here. First it was here, then it pushed up, but it couldn't get through. Tried again, couldn't get through. So now it's finding support at this level. And then it just shoots up past all these touches. So we would consider that a false break because it just shot right back down. But it might eventually break still. Nope. Here it gets rejected as well. And let's see what's happening. Here, another rejection. So this is a very strong zone. You see it's around 1.5 again. So it's a round number zone. And look what we have here. We have one strong rejection. This is how many days? I mean, we're talking on a daily chart over here. So we are at, this is 26 bars. Basically for a month, it couldn't get past this zone. And then it tried again over here, found a little bit of support, tried again, found more support up, didn't really have follow through. We would consider that a false break. Hits it again, and now it's going lower and lower. We have another touch over here at the support level. First touch, second touch, and this is in March and April, just a month away. Then it spent really the rest of the year away from that level. But then once it hits it again, look at the buyers that were sitting there. They were waiting for this price to come down, even though it's just coming down day after day after day for about a whole month. Once it hits that price, you could be certain that buyers had their orders right there, and it just pushed it up. In one day, it went up and up and up, and that made another move. So much of a move, drag it out, that it continued all the way back up to this level before. And that's the idea, guys. You know, we're looking over here at, this is kind of a range, and here was a support level that became resistance, support, support, resistance, support, 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 false break, but resistance, 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 all the way back down to support. And that's the idea. Let's see another chart. Okay, now we're on the 1 hour chart of the dollar Swiss franc. I wanted to take you to the 1 hour chart just to show you that it's not just on the daily charts or the higher time frame charts that we find support and resistance. We find support and resistance everywhere. So the market was coming down, which means that the Swiss franc is stronger than the dollar in this whole time. and it's going down, down, right? These are the lower highs, the lower lows, lower high, equal lower high, lower low, lower high, lower low, lower high, lower low. So we're seeing that it's trending down. But at this point, it hits a certain support level, and these lower highs now get broken, and we're going up, okay? So this point I want to note, I want to draw my support and resistance line. And obviously you see it's going to hit here again. So it goes and it breaks up, and where does it hit? It hits at the same price as this resistance. So this was, it was getting lower and lower, and then it became a resistance point, a double resistance point, hit this support, and then went all the way back up and hit that resistance again. This is an interesting little pattern over here because it goes up and has this wicked candle, which means that price went up in the hour but never closed above it. Since it's a wick and not black or white, that means that price did hit this spot, but in this 1 hour candle, it never closed. The hour didn't close with price above that spot. That is what you call a typical false break or a wicked candle. I think it's called a shooting star pattern. And you have the bullish candle up, the wicked candle down, and it starts to shoot down again. And that's because it hit this resistance level. So we're just noticing that. You see, guys, it's really easy. You're just marking off where you're seeing that there's numerous touches or numerous rejections of the market. And of course, the higher time frames are the ones we want to give the most credence to or respect the most. So it does come down, like we said, and hit a second rejection at this support level. That's the second one. Here's the first one. And it starts to go up again. And it goes up and up. See, I'm just putting my crossbar over here, and you're seeing it's over here, and it's the same over here. It's the same price. So I could have noticed that. Obviously, I'm not going to know which level it's going to hit and stop at, but when I'm trading a chart, and the more I'm familiar with the chart, and the more I've seen how it rejects to these prices in the past, I'm going to be wary, I'm going to be curious, I'm going to respect those zones. So it did hit here, and you have another like little wicked candle, and it starts to go up higher, which means that it found some support where it had support. I like to make templates with these rectangles that if I'm in a 4-hour chart, I use one color for my rectangle, and if I'm in a daily chart, I use another. And then this way, when I'm looking at a 1-hour chart, I'm able to tell which is the daily support, which is the 4-hour support, etc. So it found some support here, and it's going higher. And it didn't get all the way to the top over here, but we're noticing that this might be a spot as well. Okay. Now, it did end up breaking through this spot. Sorry, I'm giving it away over here. But that's fine. I just didn't want to do the playback because it just takes too long to show it on the video. But look what happened over here. This was a support level. As we noticed, it had 2 strong rejections. I'm sure you could see even on the 4-hour or the daily that these are major rejections as well. And then when it actually slowly climbed down to this spot, it really consolidated around this spot because this was a difficult spot. The market, there were sellers in the market that wanted to push through, but there obviously had been buyers sitting here. So it eventually did push through, and look what happened over here. It went down, broke through. This is very indecision candles, and then it went up and it became this support, kind of like became resistance. That's called a break and retest. It broke through it and retested it and then went down even more. But it wasn't a big break. It ended up being kind of a fakie because maybe the buyers weren't here, but some big buyers, who knows who they are, were sitting right down here and they couldn't get past. They were pushing, and finally the break, and it went all the way through and then came back, found the support again in the same spot, and kept on going. And look, another time, more for hours. This is like, how long is this going on? You have your ruler here. This is like 27 days. This is for like basically an entire month. You could look at a monthly chart and it's sitting there. Let's look at the daily chart. On the daily chart, it's just this. But you see it came down, went up, had that little false break, and hit another. These, remember those spots? These are just like very small, like 1 wicks, because it was just in one day. We were looking at a 1 hour chart before. But it's the same idea. And it broke down a little and then pushed up really high. And this spot became a real spot. This is a definite spot of support. Even though it did break over here, on the 1 hour chart, it looked like a real break. But on this daily chart, it looks like a fake out. It doesn't have any follow through. It would be a real breakout and then come back up. But it just kind of wicked. It really didn't ever close on the day past that spot over there. And then just shot back up. Hit here again. Had 1 day, 2 days, 3 days, 4 days where it stopped there and pushed even higher. So this is what support and resistance is all about. This is how we mark it up. Go back to the slides. Look at the important points about the round numbers, about the many touches, about support becoming resistance and resistance becoming support. Get familiar with this. This is a major, major part of technical analysis, and it's something that we're going to need in our toolkit to analyze the market correctly and execute our trades.